Hello, hello, hello. What's going on, YouTube, as well as the Capital Hungry community? How's everybody doing this Monday evening? Welcome to a Capital Hungry Monday market analysis stream. Through this stream, for the next about 30 minutes to an hour, I'll be doing a market update as well as intraday analysis on gold, XAUUSD, GBPJPY, GBPUSD, EURUSD, USDCAD, as well as US30. I'll be giving my opinion on these various currency pairs, precious metals, and stock markets for intraday trade ideas and analysis using technicals as well as fundamental analysis, taking in order flow, market sentiment, economic events, and going through everything I could possibly cover to give you guys as much information through my viewpoint as possible. Okay, the first thing I always like to do is go through the economic events that we have on the table in terms of scheduled data reports that may be impacting pairs that we will be trading. So some good things to understand is right here on your screen. The economic events overnight that'll be impacting the markets, such as euro pairs, Canadian dollar pair, as well as the US dollar, is at 3:55 a.m. Eastern. Over London session, we have some German unemployment change figures which will be impacting Eurozone. Also, roughly an hour and 5 minutes after, at 5 a.m. Eastern, we have the Eurozone CPI, which is going to tell us a lot more about the inflation figures that are coming out of the Eurozone and impacting euro as well. So you do have two reports within an hour that can be impacting euro pairs, but we have seen strong rebounding in both the labor market as well as inflation in the eurozone still being relatively controlled. At 8:30 a.m. Eastern, impacting Canadian dollar and Canadian dollar pairs, we have Canada's GDP month over month. And one of the main ones tomorrow to focus on, which is going to be impacting market sentiment as well as US dollar, is the USCP Consumer Confidence Report, which will impact the US dollar, US equities, as well as gold. That is the pre-planned economic events that are going to be overnight, as well as tomorrow morning, over the London trading session, as well as during the New York trading session, just to keep an eye out on that can be impacting some of the pairs you are trading. In terms of key recent fundamental points that are having the largest impact on the financial markets, as well as what we trade, day to day, if you remember last week on Friday, we had the Jackson Hole Symposium in Wyoming. The main takeaway we got from that is that Jerome Powell, as well as the Feds, confirmed that with the tapering process, as well as potential rate hikes, there is no rush on that process, and they are going to keep the policy positioning at the current position and keep the economies in a accommodative state. This means that increasing the supply of the US dollar for the time being, continued asset purchases, continued quantitative easing, delay on tapering, which we all know is going to lead to weakness in our safe haven currencies such as the US dollar, and also is going to keep the equity markets bullish. The US stock market index, for example, whether it be NASDAQ, S&P 500, or US 30, has been primarily bullish, riding the support of the US dollars being flooded into those markets by the central bank through ETF purchases, government bond purchases, corporate bond purchases, quantitative easing, keeping rates fairly low, as well as delaying of tapering talks. One of the reasons why the Federal Reserve, as well as Jerome Powell, stated that they are going to delay the tapering talks is because we have to understand, through the perspective of the Federal Reserve, they want to make sure the tapering process as well as interest rate hike process is as smoothly transitioned as possible. So as interest rates remain low and stimulus stays active for the time being, they can squeeze out as much possible gains on the stock market as they possibly can on this greed train, as well as not have any major impact on both the stock market and the housing market. Another key factor that they told us is that what they're telling the media is that they are still focused on potential Delta variant risks, but I really see it highly unlikely that the US will go back into lockdown. The only way we would see economic uncertainty within the US economy is if they were to go back into lockdown, but that is very highly unlikely. I just feel that the Federal Reserve is going to be much slower, much more patient, and much less aggressive with the tapering process as well as rising of interest rates compared to when they were stimulating the economy, as they do not want to impact their pockets and have a massive correction on the stock market They want to make sure it's much more controlled and it still keeps their portfolios intact, the 1%ers, the whales, the rich, as well as they know that having a very hectic increase in the interest rate would have a very negative impact on the US housing market as well. The main reasons the housing market as well as the stock market have been so bullish is 100% in support of the central banks. But what we can take away from Friday is that as the Federal Reserve confirmed the delaying of tapering and rate hikes, we saw the dollar drop in value as well as equity markets continue bullish. So overall market optimism with the support of the central bank is still very active. Japanese yen standalone, as well as the US dollar, is still very bearish. We're going to take a look at that in a second. The volatility fear index is still very bearish. Global equity markets are bullish. And we have no real fear, uncertainty, and the doubts having major impact on the financial markets. We do have some noise rising with trade wars coming back into the scene, as well as tensions in the Middle East regarding the Taliban in Afghanistan, but nothing that is going to be impacting or having a major impact on the markets unless those Middle Eastern conflicts lead to larger physical war between major big players, which we have not seen yet. So the main market sentiment impact has been from Jerome Powell in the delaying of taperings, where we saw this downside move on the dollar, breaking this order block area and creating some more bearish market structure on the intraday timeframes, as well as the volatility index remaining flat, while global stock markets continued bullish and the Japanese yen safe haven currency remaining bearish and flat as well. The reason the dollar dropped on the delay of tapering talks is because it shows us that we're still going to have a continued oversupply of the dollar, as well as there is no demand for the dollar, as all the demand with the delaying of tapering talks remains within the equity markets. So what I'm essentially looking for to play in terms of market sentiment on our safe haven currency standalone is, if the US dollar cannot break back into this order block in range, I see a lot of potential for the dollar to come down to these previous lows and have some downside moves to 92.4. Obviously, we have some of the more economic data to impact the US economy later in the week, with the end of this week having non-farm payrolls, unemployment data, as well as the wages figures. We know that the main focus for the central bank, the Federal Reserve, to start to actually go through with tapering as well as rising interest rates is only going to come from reaching maximum employment. We are seeing that obviously the labor market data is having a heavy rebound in the US economy, but it's still going to be delayed in the process of tapering, as the Federal Reserve is taking a much more slower and patient approach to keep the stock market greed chugging as far possible as they can, and this potentially means continued US dollar weakness. So through this week, if we don't have any fear, uncertainty, or doubt, as well as don't have anything that can bring strength to the US dollar or Japanese yen individually, I see a lot of potential for Japanese yen to maintain bearish market structure and come back to these 90.6, 90.7 lows, as well as the US dollar being bearish standalone, with the dollar index coming down to 92.4 and the volatility index remaining relatively bearish as well. The reason why I'm highlighting this now is because if we have that US dollar weakness as well as Japanese yen weakness, we can use this to our advantage on pairs such as GBPJPY for buys, GBPUSD for buys, EURUSD for buys, USDCAD sells, and as well as US 30 stock market buys as well. Okay? Now, when we're looking at gold, with the dollar here, we can obviously see at the end of the week we had this aggressive downside move on the 4-hour time frame on the dollar index here, due to the fundamental catalyst being Jerome Powell confirming the delay of tapering and needing maximum employment, as well as understanding they're going to take a much slower, less aggressive approach to tapering and interest rate hikes. This led to this upside move on gold, where we failed to break this price sensitivity area and order block, still maintaining bullish market structure. And on gold, from those 1680 higher time frame demand of price points, we've only seen upside moves, pullbacks, upside moves, consolidation zones, upside move, pullbacks, and so forth, maintaining overall overall bullish market structure with no real sign of bearish strength overall. So this aggressive upside move that led to new highs being printed on the intraday time frames above previous intraday highs on gold, while maintaining overall bullish market structure, was primarily due to the Federal Reserve delaying the tapering talks. The reason why gold went up on this is for a couple of reasons. There's fundamental bullish factors for gold, being interest rates remaining low, as well as inflation still being showing us relatively increases to the upside. And we know that investors hedge inflation increase risks by pooling money into gold, as well as interest rates remaining low is also a fundamental bullish factor for gold. And also we have obviously that we trade gold against the US dollar. So we can see that we still had this intraday high printed by buyers, and now we are starting to enter our pullback and correction stage. Our correction and pullback stages can run in two ways. You can either have a consolidation zone, an order block, or a liquidity zone, and a breakout into new highs, or you can have a high printed pullback and continuation into new highs. Something we want to be mindful of on gold is that we are entering a new monthly period, with this day pretty much being the end of the month period and starting a new monthly candle very shortly over the next day or two. So we do have the potential for higher time frame pullbacks. Right now, just as we've seen here, you can see here as we are making our upside stretch, this is the last price sensitivity area maintaining higher time frame bullish market structure around 1780s price point. You've seen various either pullbacks or consolidation zones before having continued moves on gold. Right now, from this intraday high printed, you can see that we are in a higher time frame pullback stage. What I'm essentially looking for is reaction at a couple of areas here based on key levels and market structure. You can see the white line are historical key levels where we get great reactions on the intraday time frames. Right now, we are in this corrective pullback structure from the high points, which makes a sense as we had new intraday highs printed. We have profit taking by buyers at those intraday highs, which leads to sellers jumping in hand to relieve them out of the market, creating this pullback stage or creating that corrective market structure stage, which is either going to be a consolidation zone, liquidity zone, or pullback phase. So I'm pretty much looking for two things. One is identifying this pullback stage with just identifying some bearish market structure. When I'm looking at this now, if we break back below the previous highs, coming below 1808, we have a lot of potential to come down to 1795 and get higher risk versus reward buys and continue up with the overall bullish market structure. So the green box areas are where I'm looking for buys. A deeper pullback to 1795 would be high risk, high reward, getting in at a potential dip there created on gold, letting buyers jump back in the market after coming to those better demanded price points, then scaling in at the breaks above structure. Safer buys from current price point would be a break and retest above 1812 and also buys above 1820. So basically with gold intraday analysis, right now we just have to understand that we are in a pullback corrective phase from the new intraday highs printed by buyers, and be very mindful that we are coming towards the end of the month and a new monthly period. I'm still in a buyer's bias because one, Federal Reserve stimulus and support for the economy is staying active. That means inflation will still be increasing in the short term, as well as US dollar oversupply. These are all bullish fundamental factors for gold, as well as the technical market structure is still maintaining that bullish strength as well. I would only be looking for higher time frame sells on gold if we were to break and retest below 1781, have US dollar strength, as well as tapering confirms by the Feds that could possibly come later in the week during NFP unemployment and wages data. As we know, the central bank Federal Reserve focus is on seeing maximum employment. Once the Federal Reserve sees maximum employment, then they're going to slowly transition into tapering and hiking of the interest rates, where those will all be bearish fundamental factors for gold. We do not have those confirms yet. Okay? So we're still playing the weakness in the US dollar in the short term and oversupply of the dollar, the short term increases in inflation and how investors hedge their risk of inflation increases by pooling into gold, the bullish market structure of higher highs being printed and higher lows failing to break, as well as just understanding we are in this pullback stage with the green box areas in this pathway of price being buy areas. Either we get a deeper pullback down to 1795 where you could take advantage of those sells and pullback only if we stay below previous highs at 1808. Then you could take advantage of that deeper pullback, but I'm primarily letting the pullback take place and then looking to take advantage of the buys again, similar to how we saw here, where if you're looking at the repeat here, and if you look at this way of how market structure trends, whether it be on GJ, the stock market, any commodity like oil, or you're trading gold, it's all relevant in terms of technical price action and market structure reading. This would have been your high risk, high reward buy area back at that demand zone. Breaking above the zone is your safer buy area, coming and scaling above, with the safest buys being above previous highs and then going into new targets. I'm looking for the similar type of price action and pathway of price with high risk, high reward buys at 1795. Medium risk buys if we break above 1812, and the safest potential least rewarding buys would be if we clearly break back above previous highs and extend into new highs. I could only safely take sells on gold if we were to have very strong rebounded labor market data at the end of the week, as well as a break below 1781. That is my analysis on gold and the trade ideas on the intraday time frames, as well as for even scalps at those levels that I am waiting for on gold. And just understand that is my perspective in 2 cents, fundamentally and technically. You can also complement this with the previous live stream where very similar analysis was also done. But I want to keep these very short and sweet. GBPJPY. We obviously understand that GBPJPY, a risk currency against the safe haven pair on the higher time frames, has only been trending bullish with the weakness in Japanese yen, the strength in UK stock markets, and obviously after these 2020 pandemic crash lows, all you've seen is upside move, pullbacks, continuations to the upside, consolidation phases, and breakouts. That's all you have seen in the trending in the movement of GBPJPY over the last year and a half. To keep it very simple, very bullish on the higher time frames. Now when we're coming to this piece of market structure and higher time frame range, you can see this is the last price sensitivity area around 149 that has been technically maintaining bullish market structure. From this price point, we had buyers jump in, give us a pullback, and extend into new highs at 156. From 156 going into the previous quarter from June to July, we entered this higher time frame pullback stage, but still have failed to break 149, while UK equity markets still stay relatively bullish. If you go and look at your FTSE 100, UK 100 is pretty much just about 100 points from its all-time high points, as well as the Japanese yen, both on the intraday time frames and higher time frames, has been bearish, and the technical structure on GJ has also been bullish. So I'm bullish on GJ in terms of the technicals as well as the fundamentals, and the support we have seen from the central banks in support of the UK economy from Bank of England, as well as the lack of any fear, uncertainty, or doubt. We also haven't seen any Brexit tensions or, again, any mass fear that brings any downside move on GBPJPY. So when I'm coming to the intraday timeframes here, alongside the PPLs, what I'm essentially looking for to play on GBPJPY is still a bullish bias. If we can break below 151, that's fine. I still wouldn't sell it. I would wait for a double bottom at higher time frame key level 150.5 and still be looking to scale in buys accordingly, with the safest buys above 151.5. So intraday time frames, price action, as well as intraday market structure that's starting to develop is still very bullish on GJ, with having strong reactions and failing to break that higher time frame area at 149 key level. So when I'm looking at GJ here and on the hourly time frame for trade ideas, the trade ideas I'm looking for is, you can see a bit of a consolidation here and a bit of an order block. If we were to break below the order block, I would not sell. I'd wait for a deeper pullback to retest 150.5. Very strong demand area, and the last area where we keep extending into these highs. I'd be waiting for a double bottom in that area and continued buys. Even if we get a pullback to 151.200, I would still be looking for buys. Safest buys above 151.5. This is as long as UK equity markets stay bullish, as well as Japanese yen stays bearish, I'm still in a buyer's bias on GBPJPY, both fundamentally with the Japanese yen weakness and the optimistic support in the UK markets, as well as technically when we're looking at the higher time frame structure and trend on the daily, the 4-hour trend and structure, as well as the 1-hour price action and structure as well. Green boxes being buy areas I'd be looking for, while also looking at price action confirms of a support or break and retest above these levels, scaling into 152 targets. I would only be looking for sells on GBPJPY if we could have technical breaks below 150.200, as well as UK equity markets decline and a break and retest below 150.200. Otherwise, on any risk currency against safe haven pair, including GBPJPY, GBPUSD, and EURUSD, where you have a risk currency such as GBP or Euro against a safe haven currency, whether it be the Japanese yen or dollar, I am primarily bullish on those pairs. Now coming to GBPUSD, you can see something very similar as it's a risk currency against safe haven pair, and what do you know? The higher time frame structure is almost identical to that of GJ, right? We still are maintaining this last price sensitivity area, which is holding bullish market structure, as from these price points, we extended into these highs printed by buyers. We've never broken below these price points still, and we do have potential short-term US dollar weakness with stimulus still staying active by the Federal Reserve. The only thing we've seen on the higher time frames on GBPUSD is upside move pullbacks and continuations, upside move consolidation zones, and continuations to the upside as well. Okay? So when I'm zooming in more here on GBPUSD, we can see very strong reactions at these demanded low points, but we're getting a bit of a resistance forming on the daily just around our higher time frame key level in this area, which I'll be showing you guys on the 4-hour time frame. If we can cleanly break above 1.378 and 1.38, we have a lot of potential to repeat the bounces we have seen in this area and dig up into the 1.39 price sensitivity areas, as long as UK equity markets stay bullish and we have US dollar stay relatively bearish, which it is showing us potential on the intraday price action. And we can see UK equity markets are still very well and bullish. When we're coming to GBPUSD here, we have our higher time frame historical key level at 1.378. The safe buys I'm looking for is breaking out of this bearish corrective structure, as well as coming above 1.378. Either if we get a pullback, that's fine. The safest buys on GBPUSD is above 378, and then medium term zones at 384, starting to make our way back up to the upside as long as dollar remains relatively weak. These green boxes, as well as price points to the left, are areas I'm going to be looking for buys. This reason on GBPUSD is having a break and retest and similar repetition to what we've seen here. You can see that is almost identical here. US dollar weakness, a break above our historical key level, as well as a break above this rejection zone and a break above that bearish market structure. With all of those confirms lined up, I can see very safe buys on GBPUSD from above 1.378, 1.384, and 1.39. I would only be looking for sells on GBPUSD if we came back below 1.365, had mass market fear, a decline in the UK equity markets, any potential individual tensions that can impact the UK equity markets or GBP, like for example if Brexit comes back to the table, where so far we have not seen that yet. And I would need US dollar strength, a break of this structure, and prices to come below these price sensitivity areas, as well as 365. Otherwise, on gold, GBPJPY, and GBPUSD, I am in a bullish bias for those technical and fundamental reasons given so far. Now when we're going to EURUSD, which is another risk currency against safe haven pair, you're going to see very similar structure to GBPJPY as well as GBPUSD, because the reason for this is the US dollar is the world's reserve business currency. So regardless if it's the primary or secondary in a currency quote or pair, it still holds a lot more fundamental strength and value regardless of what it's paired up against. The US dollar is the global world's reserve currency still. But anyways, higher time frames here on Euro USD, we can see we've only had two things happen from the pandemic crash. Upside move, pullbacks and continuations, upside move, consolidation zones and continuations, not breaking overall bullish market structure. The last price sensitivity area maintaining bullish market structure is at 1.7 flat, where from this price point, we extended into the highs printed. You can see a pullback here taking us back into those highs as well. We have failed to break those price points since 2020, July, September. So it's a very significant higher time frame demand zone. The same time we've had some aggressive rejection from this area is also where we've had some US dollar weakness come into play. When you're looking at the price action reading, you can see that this downside bearish move that came to retest that higher time frame demand area has been corrected, and we're also starting to break above some key price sensitivity areas with stronger bullish price action on the daily time frame there. So I am in a bullish bias on Euro USD, but again, something we have to keep an eye out for Euro USD is that at 3:55 a.m. Eastern overnight, as well as at 5 a.m. Eastern, we have both Germany job change and unemployment change, as well as Eurozone CPI, which is going to give us more information about the inflation figures within the Eurozone. So that is something we have to keep an eye on during London section that will be having a short-term impact on our Euro pairs overall. But nonetheless, I'm still in a bullish bias on Euro USD. You can see these are our higher time frame key levels, similar to our other pairs, where those demanded areas are still being respected. We're starting to break above this bearish corrective structure while forming some lower time frame bullish structure. I'd be looking for a pullback to medium term zone 1.76, high risk, high reward buys, buys above 1.8, and buys above 1.84 higher time frame key level. This is as long as the Eurozone economic data supports continued Euro upside, we have continued US dollar weakness, and our Eurozone equity markets stay relatively bullish, which we have been noticing on all global equity markets are either breaking into new highs or sitting at all-time highs, with the support and stimulus being given by their respective central banks, as well as coming well out of that fear state from the initial pandemic period. I would only be looking for sells on Euro USD if the economic data is extremely poor and if we were to break below 1.72 and 1.685. But again, on any risk currency basket against safe haven currency basket pairs, such as safe haven currencies being Japanese yen, Swiss franc, CHF, and US dollar, but I primarily just trade Japanese yen and US dollar pairs myself. You could trade Swiss franc pairs as well. As long as Japanese yen and US dollar remain relatively flat, which you guys can observe that individual price action on those currency indexes, dollar index DXY, Japanese yen index JXY, as long as those stay relatively bearish in price action and market structure, global stock markets stay bullish, and we hold these price points of interest, the green boxes are buy zones on Euro USD. On GBPJPY, on GBPUSD, and Euro USD, I'm all in a bullish bias because it's a risk currency against a safe haven pair, and because the US dollar is the world's reserve currency, you have that order flow movement by the market makers run as one, and you see pretty much the same market structure and price action across GJ, GU, and Euro USD for the most part on a macro perspective, right? Now, what's going to be very interesting to confirm this is the next pair we're doing analysis on is USDCAD. USDCAD is the inverse. USDCAD has our safe haven currency as the primary. The Canadian dollar is a part of the basket of risk currencies. The basket of risk currencies being your Euro, GBP, NZD, AUD, CAD, and so forth, right? So when you look at USDCAD, our bias is going to be the inverse. We're actually going to be in a higher time frame and intraday sell bias on USDCAD as we have that US dollar weakness and Canadian dollar strength. So let's go check that out now because it helps confirm the order flow movement as well as market sentiment and what I'm talking to you guys about fundamentally and technically. When you come look at USDCAD now, you can see that from these upside highs, we've actually had some aggressive bearish moves. And instead of having upside spikes like on GU and Euro, USD, or gold after Jerome Powell sentiment, we had this aggressive downside move here to close off the week, now coming into this order block. As long as crude oil stays relatively bullish when you monitor individual movement on crude oil, which gives more confluences of Canadian dollar strength. One of Canada's main revenue sources is the exporting of crude oil from the Alberta oil sands. Investors always price in strength in crude oil as short-term strength in the Canadian dollar as well, fundamentally with that correlation. So as long as we have crude oil come back into the scene and the buyers jump back on crude oil from those $60, $65 price points and start to chug back to the highs, and as long as we have the dollar index bearish, I'm looking for sells on USDCAD below 1.258 and below 1.25 to start to target intraday lows again. As long as equity markets continue bullish, US dollar continues bearish on that individual movement in the support. Obviously, the US dollar is bearish because it's going to remain oversupplied due to the Federal Reserve keeping the economy in an accommodative state, delaying tapering, and not rushing the interest rate hike process until maximum employment's reached. I am looking for these sell plays on the intraday timeframes over the next session periods. The only thing we have to be mindful of is the end of the week with the US jobs employment data with non-farm payroll, unemployment, and the wages figures, okay? So USDCAD is the inverse of GBPUSD and EURUSD, not exactly, but more in the topic of discussing market sentiment and order flow. There is anything that you guys are trying to understand that is market fear. You have to understand that you can think it's market fear, but unless it has financial market impact, you can't say that it's fear and instability. You have to digest the news headlines and catalysts. For example, we saw that we're seeing a lot of tensions within the Middle East that can bring potential market fear. But are we seeing stock markets drop based on what we're seeing in the Middle East across any regions? No. Are we seeing the volatility index go bullish because of the Middle Eastern tensions? No. Are we seeing the Japanese yen or other safe haven currencies go bullish? No. We had some short-term impact when the Middle East tensions first came back to the table, but it instantly got waved off as investors in smart money, the whales, have primarily just been extending their stock market buys as they've had great price points from the pandemic lows and are riding the support of the central banks. So what the signal we got last week is that the economies are going to stay in accommodative state, and this is what led to this bearish move on USD-CAD from the retest of 1.27. So any breaks below 258, I'm looking for sells. Breaks below 1.25, I'm looking for sells. I could safely call out buys. I could only safely call out buys on USD-CAD if we were to break above these rejection points, as well as the bearish market structure that's developing. I could only safely call buys above 1.27 if crude oil turns bearish, or if the US dollar turns bullish. Otherwise, my main bias on GJ is buys. GBPUSD is buys, EURUSD is buys, and on USD-CAD it sells, playing dollar weakness as the world's reserve currency and potentially extending the sentiment given by the Federal Reserve and Jerome Powell at the end of last week during the Jackson Hole Symposium. The only thing I want you guys to watch out for as manual retail traders is we do have the possibility of some deeper pullbacks because we're coming to the end of the month period and starting a new month with new monthly candles forming and that potential order flow being set up for the new month as well. Okay? And something to watch out for is the jobs data at the end of the week for the US, where we know that central bank Federal Reserve focus has been on seeing maximum employment. That's what their real signal is going to be to start transitioning very slowly and patiently into rising interest rates and into tapering off stimulus. The Federal Reserve knows that if they rush tapering and if they rush rising of the interest rates and interest rate hikes, if they rush that process and they are too aggressive for it, it's going to cause too much instability on the stock market as well as on the US housing market. and we're going to see too much of a fluctuation within the markets that's going to impact the pockets of the ultra rich and ultra wealthy. They do not want that. They want to transition into the tapering and interest rate hike phase as slow as possible so they can squeeze out as many gains on the stock market and housing market into new all-time highs, so when the correction does happen, it doesn't impact their portfolios too much, and they can still buy that dip when the correction on the stock market happens and continue chugging back into all-time highs. Also, the tapering and interest rate hikes, when they're confirmed, is going to cause massive bearish moves on gold in the higher time frame, especially if you reference post-2008 financial crash on gold, which I've done a lot of historical analysis on my Capital Hungry page. Last but not least is our US stock market. Stocks only go up, do not fight the feds. I've only been looking for buys on the stock market for the last year. There is no reason at all to sell the stock market unless we get confirms of tapering. You've only seen upside moves, pullbacks and continuations to the upside, consolidation zones and breakouts to the upside, right? Now you can see in terms of price action and market structure, we are sitting around these all-time highs. I'm either looking for two things. Buys at the break of highs at 35,550, or if we get a deeper pullback to 34,600, buys. Either we do the deeper pullback, double bottom in this area, buys back to the highs, or we break and retest above 35,550, buys. Any pullbacks or corrections in the intraday timeframes that happen on the stock market, just observe it. Identify a potential area you can find a technical support and jump in back with the greedy 1%ers as we continue to chug into the highs. Any intraday pullbacks in the stock market have really just been profit taking moves as we still just keep continuing to the highs. The reason for that is the stock market is purely being artificially pumped by the support of the Federal Reserve and smart money, as well as the 1%ers, the whales. They're also riding that support of the Federal Reserve and continuing to extend their stock market buys, and they want to squeeze out as much as they possibly can before interest rates actually get hiked. Okay? So anyways, I want to keep these webinars fairly short and sweet. I just want to give a bunch of information and my viewpoints technically and fundamentally on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and US30. I've given my main bias on those pairs, price points of interest for entries, fundamentals and technicals, as well as what we would need to adapt to on the flip side if my bias is incorrect. We've also discussed the economic events that we have overnight, as well as tomorrow New York trading session, as well as the main key fundamental points to focus on. If you guys appreciate these webinars, please do me a favor, go watch the other videos on the Capital Hungry page here, where you have tons and tons of videos on crude oil, market analysis, live market trading, everything. Motivational videos, psychology videos, risk management, everything. There's over 100+ webinars on the free Capital Hungry YouTube page. Also, make sure to follow the Capital Hungry Twitter, which posts headlines, analysis, stream reminders, and more. A lot more headlines than FOREX Factory, and FOREX Factory even uses the Capital Hungry page. And my goal is to do this YouTube schedule every week. I'm going to try my best to stick to it. Monday at 7 p.m. Eastern every week is going to be a Monday market update. Wednesday at 7 a.m. Eastern during New York session is going to be a scalping session live stream. Friday, end of the week, during some point during the day, I'm going to do a live stream where we're going to talk about personal self-development, whether it be physical, financial, or psychological self-development. So this is the live YouTube schedule I'm going to try my best to stick to, and I'm just going to stick to providing value, information, and analysis on the markets. You have tons of resources from the Capital Hungry YouTube page with webinars across ranting on society, analysis, fundamentals, technicals, psychology, personal development, and more. The Capital Hungry News Twitter, and the Capital Hungry free Telegram analysis channel. Okay? You can also see all of these resource links within the description, as well as within the stream layout, and here on your stream reminders. Okay, everybody, thank you so much for attending this quick Monday market update. I hope you guys appreciate the information given. Trade ideas were given on gold, GJ, GU, EURUSD, USDCAD, and US30 for both sides of the coin, but my main bias was given. Please make sure you guys like, subscribe, and also comment on the save stream after to help the YouTube algo. And I will see you all Wednesday morning for our scalping session. Take care, everybody. Thank you for the support, and I'll see you guys Wednesday morning, 7 a.m. Eastern for the New York scalping session.